If you have big plans for your sole trader business, you may be thinking about how the structure of it might change in the coming years. For many sole traders, transitioning to a limited liability company is often the next logical step. There is nothing preventing a business converting from a sole trader to a limited liability company at any time, nor is there a set point at which converting to a limited company is a necessity. So should a business change? Often, converting from a sole trader to a limited company is simply a matter of personal preference. If you are thinking about changing, ask yourself, will I pay less tax and receive a higher take-home pay through a limited liability company? Will the prestige of a limited company help me attract more clients and grow my business? Could I benefit from my personal assets being protected should my business fail? Do I want to sell my business at some point in the future? And do I want to bring in business partners or attract outside investment? As you can see, the choice of business structure very much depends on circumstances and the future direction of the business. When should I convert? The most logical time to convert your business is when the business grows past the GST threshold. Now, once the revenue has grown over $60,000 per year, the business will need to register for GST. Now, while not compulsory, this is often a good time for the change to take place. Now, to understand GST and registering for GST, check out this video up here. How to change. Converting a business from a sole trader to a limited liability company is a relatively simple process, although it's important to ensure that the sole trader business fulfills all its prior tax obligations. Once the decision has been made to change the business from sole trader to limited liability company, it'll be prudent to include, well, the following steps. So step 1, registration of the limited liability company. The first step is register a company and issue shares to the various shareholders of that company. Now, it is likely that the shareholders and the directors will be the sole trader, and they can do all these roles on their own. The registration procedure is straightforward and it's done entirely online. Now, you can learn more about the registration process, selecting and reserving your company name, etc. by having a look at this video here. You'll need to notify Inland Revenue. Changing the structure that the business operates under means that there could be new tax obligations that did not apply previously. Now, Inland Revenue must be notified within 21 days of making a change to any business structure. Now, that's so IRD can update their relevant tax records. You then need to transfer the sole trader business to the new company that you've just formed. Now, depending on the sole trader business, there may be existing business assets. There could be property, machinery, equipment, plant, etc. to transfer to your new limited liability company. Now, you may need to arrange to sell the business as a going concern to your new company. Now, transferring assets during the change of entity can be a complex matter for some businesses, so you should definitely speak to an accountant for expert help and advice to get this right. You'll need to set up a business bank account in the company name. Now, it's advisable to keep the sole trader business finances separate from the new limited liability trading company and, of course, your personal finances. So keeping separate bank accounts is ideal for this. Business records. You'll need to ensure that all your new business records are kept separate from the sole trader and personal records. There will need to be a final set of accounts for the sole trader produced and then a final tax return to file. Now, this can be done at the same time as the first company's tax return is filed. In any case, a personal tax return is still going to be filed each year by the owners and shareholders. Now, it's really important you get the right advice, especially when it comes to tax and finance matters. So I strongly suggest you talk to an accounting professional to help you get it right before you start making any changes. Hey, thanks again for watching. If you want to see more, hit that subscribe button. Till next time, see you then.